Good morning, traders and investors. It is Friday, May 23rd. Just a quick reminder, Monday is Memorial Day in the States, so the markets will be closed. Overall, lots going on today. We got Trump coming out, swinging the axe with tariffs again. We've got Trump recommending 50% tariff on the European Union. The Dow is down about 500 points, if not more than that right now. You can see the S&P 500 futures in early morning here, selling off on this news. The Nasdaq down 2%, S&P down 1.6%. So lots of tariff stuff. Also, Trump says a 25% tariff must be paid on Apple iPhones that are not made in the United States. If we take a look over at Apple shares, they're getting hit this morning as well, which Apple is also a heavyweight. So if Apple shares drop sharply, it's going to pull the market down. Now, overall, I feel like people are getting a little bit more numb to the tariff. We'll see how this plays out. Obviously, the more we hear about tariffs, the more numb we kind of get to some of this stuff. So we'll see how this plays out. Obviously, 50% tariff on the European Union. I don't know what the current tariffs are. I don't know if this is 50% in total or 50% more or what. But anyway, the market is obviously reacting down. It's creating some pullback and selling. We'll see how that goes. Now, we talked about this 2 days ago. We saw a big wave of panic selling. It closed up at 10, which is a extreme level, and how that usually takes a day to three, I mentioned, for the markets to wash out. We can see here let me just go back to the S&P 500. We can see here how the market has pushed down into this oversold territory. Whoops, that's the Dow. The S&P 500 panic selling brought it down into this oversold territory. The market put in what it looks like at this point was a little bit of a short-term bottom and bear flag. It started to move down into the closing bell yesterday, and now the market is moving down. Let's just stretch this down a bit. Now the market is trading down at 5771. So 5771, which is right at the 20-day moving average. So it is going to be oversold again. And it'll be interesting to see where this Fibonacci level actually falls on this chart. If we go from the high down to this low and up to here. So it's going to bring us close to 100% measured move based on this initial drop bounce. And we're going to see probably another big bout of panic selling. The Russell 2000 is down 2.2%. So that's broad market. So we're going to see another wave of panic selling. We're going to be oversold. And we're probably going to see the VIX, and the VIX is already up 25%. We'll probably see the put-call ratio jump up. Again, we'll see how this unfolds. The market is going to be at a point here where it needs to find support or it is going to lose its momentum. Too much panic selling. If the market keeps pushing into oversold conditions repeatedly, it goes from an opportunity to it's actually killing the upward momentum and changing the trend. And today is going to do some damage to the charts in terms of that and start to lose some of that momentum. But again, it is going to be a big gap down. It is a news-driven move. It's going to be at the 20-day moving average. It's going to be at a Fibonacci 100% measured move. We are still within an uptrend. And so a lot of times we do get very sharp drops that are just enough to freak people out and think everything's all hell's falling apart again, and then the market can shoot higher. So this is another potential one of those we need to see. We did break this high on the S&P 500. It kind of unwound. We kind of expected some type of pause or pullback, and we're definitely getting that today. And then we'll see how this moves. Maybe the market wants to go push higher going forward. So we don't want to get too carried away with today's move. It's another news-driven move. Yes, the market's down 1.5–2% depending on the index, but in the grand scheme of things, it's not like earth-changing by any means. Let's take a look at where money's flowing today. So it's flowing out of stocks. It is moving into bonds. If we take a look at the daily chart of bonds, we've saw a flush down there yesterday, some big volume. It's rebounded up. It had a nice little run up earlier this morning. In the last 20 minutes, you can see on the bottom chart here, last 20 minutes on this 10-minute chart has pulled back. So it's kind of hit short-term resistance. Obviously, just drawing a line through here, fairly significant candle wick lows, support. It's poked in there. So a little bit of selling there. In the grand scheme of things, we are seeing money move into bonds and gold today. So gold is up 1.6%, having a pop on this news. Again, I'm never a big fan of news-driven moves. in big gaps. They tend to get filled at some point, and they're an emotional, crowded-driven move. So we're going to see probably panic. And, if the stock market does find a bottom, we're probably going to see gold pull back and sell off as money goes back into the stock market, and bonds might pull back as well. So again, we just have to let this noise shake itself out. Don't get too carried away with intraday noise and price movement. Looking over at crude oil, it had a sharp drop on this news. Obviously, big increase in tariffs is going to slow shipping and demand for oil, so oil has taken a quick hit. But again, let the markets just digest all this. This is going to be algos and people on the trigger, way over hypersensitive to the news, who are glued to the screens, and they think everything is like going to change the whole outlook of the world in a blink of an eye. But all this is really just news and a lot of posturing and all that stuff. We don't need to get too worked up at this point. There's nothing we can do about it anyway. Let's take a look over at Bitcoin. Bitcoin, with our band strategy, we ended up hitting our target, one of our targets, or actually our second target. It's pulling back a little bit today. This goes to show how Bitcoin still is connected with overall fear in the stock market. When the stock market sells off in a big way with panic, it gets sucked down with it. And so that's what we're seeing today. And overall, we just got to let the market work itself out. This is just a Friday going into a long weekend. If there's shorts, they're going to want to unwind today, most likely. Shorts aren't going to want to hold over a long weekend with the amount of news that can come out and move the markets. So that should hopefully provide some buying pressure. And then also, I think we've just got a lot of fearfulness in this market, and some people are going to want to get out. So it's going to just be probably a choppy, volatile day. We'll see where the day ends. Now, we have been noticing more or less at the end of the trading sessions, more often than not. If I just zoom out, it's kind of hard to see here. But more often than not, I'll just zoom in so we can see it clearer. We tend to see selling right into the closing bell. We see a bout of selling pick up, and this has been going on for a while. So we still have some big institutions unloading portions of their portfolio, I think, into the closing bell when there is liquidity, and they're just lightening their portfolios. Again, I still believe this is a bear market rally or a dead cat bounce, whatever you want to call it. And this is where institutions are, more or less trimming off portfolios, reducing their exposure, or at least savvy investors lightening their portfolio and putting the shares into the hands of the average investor. And then eventually the market rolls over, and the average investor ends up holding the bag somewhere up here, and they don't let go until they take a huge hit and they can't take the pain anymore. Other than that, let me see what else there is here. Two last things real quick before we go. If you didn't watch yesterday's video, I think near the first third of the video, somewhere in there, I talk about what it takes to be a successful trader and investor. I kind of go through 6 or 7 kind of points that I believe that I follow, and that really all traders need to kind of go through. It doesn't matter the strategy you use in order to be a successful trader in the market. So we had some really good feedback on it yesterday. So take a quick listen of that little spiel that I mentioned in there. Also, we had another member ask about what's up with these candle bars here on this chart. They're saying, how come we have down days where the market sells off and goes down, and the candles or the wicks, the bars here are all green, and sometimes they're actually orange or red. The way this is programmed to move into tell us a short-term momentum strategy. So more or less, when it's red, means we don't want to hold stocks. We're looking for inverse ETFs, or we're looking to buy into like overbought market territories, or sell into them and expect the markets to move down. Orange means there's a trend reversal taking place, and then green means we are in an uptrend. Lime green means we are in an oversold condition, and the market should try to find stability. Obviously, today we're going to see the markets open lower. There's going to be another bout of oversoldness in the market, and probably another huge spike of panic, and hopefully that will spark a rally and a bounce, and maybe even a big reversal bar today if the market rebounds with a vengeance. But obviously the tariff stuff, people are definitely hung up on it. It is a big deal, and it might hold the markets down. They might gap lower and kind of stay down, depressed for the session. So if I just scrolled back here on the S&P 500, so this same chart here obviously shows you go into an oversold territory. It pushes even further into oversold territory. the market loses the green bars, the upward momentum, the trend gets kind of eaten away, you go neutral, and then you go into red bars. And red bars signal that we are in a short-term momentum downtrend. And more or less, we will end up seeing, overbought market conditions, these red shaded areas. Just like the lime green, this is the opposite. This is shaded overbought territories where the market tends to, become overbought and wants to pull back. Usually you see some type of pullback after that in the markets. And anyways, all that is obviously kind of shown in my book, Technical Trading Mastery, as well. Chapter 10, 11, and 12 shows you trend analysis, overbought, oversold, and of course, panic selling and FOMO. If you haven't read it, it's a good way to get a better understanding of how I view the markets. And knowing where we are with these sentiment moves allows us not to panic like everyone else, but to actually be excited to know what's happening and what is likely to come from that panic versus being the herd and running around with their heads cut off. Anyway, that's it for now. Talk to you soon. Bye-bye.